Welcome back to Trading 360. I'm Nicole Petalides, live in New York City at the New York Stock Exchange. Time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman's with us, Chief Market Strategist, BullseyeOption.com. Good morning to you both. Thanks for being here. You're at the CBOE. I see you there, Alan. Great to see you on this Thursday. So the first trade or name that is on your radar before we get to the actual trade, ALCOA. First of all, I know you both remember when ALCOA used to kick off earnings season? I mean, it was number one. We all paid so much attention to it. It's all about aluminium. As the dollar has come down a little bit, we've seen ALCOA too also moving higher this month. Tell me a little bit about ALCOA.
All right, well, there's a theme here, and I'm looking at the metals. Now, the metal mania, I have to tell you about the foundation for this. This particular sector, if we look at materials, has had the strongest month that we've seen. Now, you mentioned ALCOA used to be a big boy, and they used to be in the Dow, and they used to kick off earnings season. So it's still something on the radar as far as opportunity goes. But I think we have to talk about the travel theme that your last couple of guests have been going down. And the fact is that the destination is unchanged. When we talk about rates, the Fed talks tough. It's great at talking tough, but the reality is that if we look at rates further out, 2023, we peak at 5%, and then we go down to 4% in 2024, we go down to 3.5% in 2025, and 2025 all the way to 2030. So what does that mean? That means the dollar is going to stop going up, and that's what this is all about. This dollar dive has helped support the metals. So the first one is ALCOA.
Yeah, and that's exactly what I noticed. Ben, your thoughts?
Well, I'm looking at ALCOA. We've seen a, bottom starting to form here. We're coming off the August highs that we saw up around 58 last month. They traded all the way down to 33 and, well, possibly a bit of a bottoming pattern form here. I'm taking a look first and foremost at the hourly time frame. And the one thing I'm noticing here is we did take out the set low in October, but here you can see follow through down around that 33 level is somewhat limited. So they scream back here, talking right back up to this 50 level, currently testing the lower extreme of a bit of a range that we're in, hanging out around 48 here. I wanted to just take a step back from these hourly candles and show you what I saw in terms of the 4-hour time frame. And as I look at the longer term time frame, I see basically that we're smack dab in the middle of the range that we've been in. This goes all the way back to, well, we're looking at end of May, June. Basically, I'm seeing here this range here that we've been. You also notice that it's part of a trend environment to the downside that we've seen. So just kind of hanging out in the middle of this range. A pivotal area, we talk about how if we can get up above, we retest that 60 level, the 58 highs that we just talked about. Lower extreme gets retested if we work our way through the middle of this down to 33. Now, taking a step back here from these 4-hour candles and just looking at the daily time frame, you can see how we're now above the 50-day moving average, this blue line. We're below the 200-day moving average. That's that yellow line. But also, as I look at it, you can see that we're down 22% year to date. RSI, the study on the bottom, not really providing a lean one way or the other. So kind of in a pivotal area. You can see in the middle of this range that we've been in, again, since the end of May, beginning of June. So this is going to be an area to keep a close eye on in terms of getting a feel. But either way, you can see trending lower and in a bit of a range here since this spring.
Yeah, okay, understood. So, and that's the point. And what do you think about that, Alan, when you look at Ben's chart?
Well, that is the exact point. I like it when Ben goes first because then I can give a retort. So this is a stock that's been between 35 and 55 for 3 months. So the midpoint pivot on that is 45 is the support of this range. So he talked about that 45 level as being important. That's what I'm leaning on. I'm looking at a June 40 call, which is below that. It's trading for about $13 for June, which is 7 months at time, as opposed to $12 for April. So why not buy more time? Most important here is this bullish divergence bottom in the fact that it made new lows but not new highs in implied volatility. And we've talked about this over and over and over on the show. That's how you see a sentiment shift. Now, if it breaks out of this range above 55, it sends it to 75, and that option does very, very well. And I want to remind you, when I was disparaged the last couple of appearances for picks on MU and AMD that have doubled in value, just because I like the risk reward and it's a different style of trading these in the money options, looking for this bullish divergence turn, and that's what I look for.
I'm going to give Ben a chance to retort. Any rebuttal here at all before we move on, Ben?
You know, Nicole, I just like what you said and how you introed this stock. I mean, I do remember back in the day, we used to look to ALCOA, one of the first names to report, and it was kind of that indication of economic conditions here in the U.S. and globally for that matter, right, in terms of demand for aluminum. But things have changed significantly over the last 10 years, 5 years especially, and it seems like more tech really kind of takes on that role, the FANG names, for example. But yeah, it was funny to hear you say that because I do remember and
Good old days.
big time. ALCOA used to set the tone for sure.
The good old days. How about U.S. Steel? I mean, that's another good old days stock. I mean, what we've seen here, though, it's been bouncing along the bottom. I mean, it's had a recent run up. $16 was a recent low that we saw over the summer. Alan, why is this one on your radar? A similar story?
Well, U.S. Steel is about 23.50 right now. It's right about in the middle of the range between 16 and 26 for the last 6 months. So 20 is a real important psychological pivot as well as a 21 midpoint. So I'm looking at the April $20 call, which is obviously in the money. We've got a bullish wedge here. And so a breakout of this range target is 35. And that option would nearly triple in value. That April 20 call is trading for about 6 or less right now. So that's the way I'm looking to play. Again, it's a metal play on the declining dollar, and the fact that, you know, ALCOA, it was significantly off the top, U.S. Steel significantly off the top, and we've seen a turn in this sector, and let's see if we can get some more climb.
Yeah, well, you're betting on the declining dollar, which we have seen. I mean, we've been saying 106, 106. I mean, right now, since I started the show, it ticked up to 107. You know, the question is, where does it stay? And Ben, I know that's on your radar as well. Tell us about U.S. Steel, Ben.
It is, Nicole, and I think as we've seen that dollar come off recent highs of around 114, 115, we've seen these stocks fare pretty well amidst that sell-side activity in the greenback. And I just wanted to start with shares of U.S. Steel, ticker symbol X. Nicole, you mentioned the 16 low that we saw, 16, 17 low we saw this summer. I started looking at shares of U.S. Steel around September, and when we were bottoming out around this 18, 19 level, and I'm looking at this most recent run-up we saw, again, back up to around 25 this month. Still holding below that August high. You can see up around 26, but also I'm noticing the September low, the test of the summer low failed to take out that low extreme that Nicole brought our attention to earlier, again around 16, 17. But taking a step back from this hourly time frame, I had a look also at the daily candles, and I wanted you to see, first and foremost, the same pattern that we just talked about as far as when we were looking at shares of ALCOA. You can see the trend lower, you can see a little wide range consolidation forming, and a bit of a rise here as we kind of work our way up into the middle of this balance area. But let's look at some of these areas of consolidation, because I like to draw these boxes to kind of focus your eye on the horizontal consolidation, the development that we've seen, the value that gets formed. Here you can see a trend environment to the downside, again hanging out in the middle of the range, so no real lean one way or the other here, but no indication that the trend or working assumption that this one's trending lower has been invalidated. One more step back, guys, into this daily time frame shows holding below the 200-day moving average. That's the yellow line. We're above the 50-day moving average, but taking a look at this one year to date, I see, look at this, basically unchanged. So you can see how shares of U.S. Steel have done pretty well compared to the broader market and some of the other big tech names that we were just talking about, right? So U.S. Steel, again, doing well with that dollar coming off recent highs.
Right, understood. Okay, so what do you think about that, Alan, after Ben gave us a nice chart there?
Well, we got 5 months of time. Being long from 20 is what this is equivalent to. The break-even's, what, $1.50 or so higher. And the April option is only $50 more expensive than March. So again, buying more time, looking to see how this moves here over time, not necessarily next week, next month, you know, but we're talking about the third Friday in April is expiration. And like I said, it's a deep in the money play with a high delta. So it's the strategy as much as the stock, but I like U.S. Steel's potential. Let's remember where commodities were back in March and April, and they've really lost their shine, but I think they can make a comeback as well.
Right, understood. Okay, last but not least, let's take a look at gold. We're looking at Barrick Gold in particular, which has been trading around $15.50 or so. Your thoughts, Alan, on Barrick Gold?
Well, gold finally bounced, and that's great to see, because the dollar downturn caused that bounce off that bottom, off that new year low, and that's a great example of that bullish divergence I look for. everybody was so negative on gold. The trade was negative gold. Gold was going straight down. Now it has bottomed out, and you see that shift in sentiment. That's what I look for, is that change by seeing new lows, which we had, and not new highs implied volatility. So there wasn't as much fear. So this stock has been mostly between 15 and 1750 for the last 4 months. A breakout of that target's 20. And also the drop from 25 down to 15 has a 20 midpoint. So it's kind of a technical magnet there. I'm looking at a June option, 7 months of time. A June 12 calls trading for about 450. And so right now it's about 350 in the money. Again, 7 months of time. And I think gold's got a good start here to the upside.
Amazing how you're bullish on all of these. I wonder when that trend started for you. Were you bearish on the group at some point? Ben, tell us your thoughts on Barrick Gold.
Well, Alan opened up saying that there was going to be a theme here today in terms of metals. There's obviously a theme here as well, and that is the weaker U.S. dollar. We've seen Barrick shares of GLD, which have gotten a lift. They spiked back to 1660 from the lows that we saw earlier this month. That was down around 13, you can see. But one thing I notice here is that, this move came in reaction to earning as well, the spike lower and then the rally back up as gold's been coming off the lows. Alan pointed out the bulls have been really cheering this move back on up and through 1700 through 1750, but the move up you can see here still short of those August highs up on the left side of your screen there, up around that $17 level. So taking note of, again, a significant move higher. We're talking almost $4 to the upside, but you got to take out those August highs before I can get excited about it. Let's take a step away from this 1 hour look at candles here. I've got the 4 hour time frame here. You can see similar pattern in terms of what we were talking about with ALCOA as far as what we were looking at in terms of U.S. steel. You've got a very well-defined trend environment to the downside. And in this instance, on the 4 hour candles, did go ahead and just look. I drew some balance areas for us to check out. And you can see again that, consolidation here has been occurring at lower and lower levels. We've got 3 really well-defined areas. Look, we just retested the upper extreme. You can see the high conviction associated with that move I mentioned off 13 to 16, but unable to take out those key levels. Again, those August highs. Now, let's take another step back here. Let's move away from the daily time frame. And actually, I got a weekly chart here. So this is longer term. We're going all the way back to, we're talking July of 2011. And look at this, almost in identical fashion here, you guys. You can see, look, I drew some balance areas, and as they appear on the screen, 3 very well-defined areas, consolidation. What it is focus here for me is this 20 level, because this is the bigger picture. We're going all the way back to a range we've been in for the last 10 years. 20 is going to be pivotal. Again, above that opens up a door for a retest for Allen's levels, and we see weaker dollar that would support this narrative. Below it, kind of just continuation of the pattern we've seen, the trend environment to the downside. But right here, 1820 is going to be significant over the next couple weeks.
So a significant level and an attempt to take out some highs, but not really able to do it. Alan, your final thoughts here. Alan Nuckman.
Well, I absolutely agree with Ben that 20 is a critical key level. Now, if it gets to 20, this option doubles in value. So I put myself in position for success with these limited risk in the money options that have plenty of time for development. And this is a strategy that's been successful until it isn't. But that's the way I like to position. I tie up less money, I've got higher probability, and I've got time for the markets to do whatever they're going to do. But in the bigger picture, we got to talk about the S&P at 4,000 here recently. We were almost at the halfway point, 15% off the bottom and 15% off the top. So, as far as the sentiment, people still are negative, but the market reaction, considering everything that's happened in the last year, is still relatively muted if you put it in historical context.
All right, we're going to leave it right there. Thank you both for the big 3 today, a metal theme. Alan Nuckman, Chief Market Strategist, BullseyeOption.com, and our own Ben Lichtenstein. Great job there with the charts. Thank you both.
Thank you,
Coming
Nicole.
up next, we're going to be spotlighting big box retailers. Caleb Silver standing by.